Okay, guys, I guess we can start now. So, thank you for joining this webinar. This is Mark De La Paz from FX Instructor. And as usual, this is the, this is not actually usual because this is near the end of January, and yet we're having our first webinar over the ECB meeting. Now, this is a very tense moment for a lot of people. After what happened last Thursday, you've got a lot of brokers actually lowering their leverage ratios for clients. After the decision of the SNB, you have a lot of traders out there asking questions whether they should be participating in the market, whether they should be trading this ECB release. Now, just to give you guys a backgrounder on what has happened so far for the week, we started the week with the French President Hollande saying that this is going to be an important week for the Eurozone. Hollande was saying that the ECB will be printing about 600 billion euros or so. And then at the same day, we heard from Angela Merkel. Angela Merkel said that, no, this is not going to be a seminal moment for the ECB. This will be just another ECB meeting. And then, of course, yesterday, if you look at your chart, you're going to see that if you go hourly scale, you're going to see that there was this whipsaw near the open of around the open of the U.S. market. Why was that? Why did that happen? Because yesterday there was a report that came out, and that report said that the ECB would be printing about 50 billion euros a month for the next 2 years. That's basically equal to QE1. No, not really equal to QE1, but the approach is very similar to what the US did, what the Fed did in QE3, where they printed around 40 to 80 billion US dollars a month to shore up the recovery. In the case of Europe, the rumor yesterday was the ECB will be printing 50 billion a month over the next 2 years, which would roughly give us about 1.2 trillion euros in the next 2 years. Now, how important, how big an amount is this? I would say that we're talking about adding another, in purely cash terms, you're talking about adding another about 10% the size of 8 to 12% the size of the Eurozone economy. Okay, so if you ask me how important that is, well, adding 10% in theory in cash to your economy is pretty big. Okay, it should be something that ought to really boost the Eurozone economy. Now, before we look into chart details and think about, or rather speculate about what can we do as far as trading is concerned, let's look at the backgrounder on why this is, there's this big debate right now on just what the ECB is going to say today. First, last year we kept on hearing from the ECB that the rate cuts that they did was the last one, and that the next step as far as the ECB is concerned would be actual QE. Now, last Wednesday, we heard from the European Court of Justice, and the ECJ, the European Court of Justice, told us, or rather, they gave an opinion Wednesday last week. They gave an opinion that said that it would be legal for the ECB to do OMT. Now, what's OMT? Outright monetary transactions. Basically, the OMT program is the ECB version of QE. It allows them to buy the securities, the debt of European governments. Although there's a twist to it, unlike in the U.S. where the U.S. Treasury would say print new treasuries or raise money, issue new treasuries, and then the Fed can go in and buy these treasuries. The mechanism for the ECB is they have to buy the debt of European governments from the secondary market, meaning ECB cannot go to the Treasury, the Europe Treasury or the Treasury Department of, say, Greece and say, hey, are you issuing a bond? Let me buy everything. They're not going to be able to do that. The mechanism for the Eurozone is ECB will have to buy from the secondary market. So basically, they have to buy it from the banks instead of going directly to a specific country. That was a specification that the European Court of Justice gave in its opinion, basically to make it comply with the legal framework in the Eurozone, where it's actually illegal for the ECB to directly help a specific country without consulting with the other governments. Okay, so that said, what are we supposed to expect now? Are we really expecting some action as far as the ECB is concerned? All the hints that we've had so far really says yes. In fact, that's one reason why yesterday, or rather, that's one reason why last Thursday, the Swiss National Bank told us that they're not going to defend 1.2 anymore. If I were the governor of the SNB, there would be, well, let's put it this way, I would be remiss in my duties if I kept on buying a currency that's about to depreciate. So that seems to be what everyone's thinking. The euro is going to depreciate, the euro is going to depreciate. The ECB is going to print money, and according to textbook, if a central bank will print money, then the value of its currency will go down. Okay? Simple supply and demand. If you make a lot of something, then that becomes cheap. Okay? So that is where we stand, with expectations that your euro is about to sell off some more. Now, at this point, I'd like to examine just what happened with the euro in previous ECB decisions. Or rather, what happened with euro in a pen and fire also depends on expectations, does it not? Say if QE. Well, actually, that's what I want to point out. It's not just if it's less than expected, but is it actually already priced in? Okay, so remember that when we deal with economic data, there's always that question of, is that fundamental event, is that news something that the market has known well beforehand? And we've known that this was coming. Even though people were still anxious about the ECJ decision, I would say that there was really no other option for the ECJ but to declare the OMT program of the ECB as legal. If they said that it was illegal, imagine the kind of headache that Mario Draghi would have right now. Okay, imagine the turmoil that declaring OMT as illegal would make for the financial markets. So to me, that there was a foregone conclusion that that's what the ECJ would say, that it's legal. It's just that how are they going to explain it to people who are a stickler for the law? So that's the big question for me right now. Is the QE decision actually something that has been fully priced in by the market? And you know what? After looking through the charts the last couple of hours, I actually am about to say there's a very big possibility that it has been priced in by the market. We've known that this was coming. The S&B essentially helped alert everyone, reminded everyone that this was going to happen. Okay, let me just show you the charts from last Friday or last Thursday last week. This is Euro USD, guys. If you look at your Euro USD, you actually saw it drop by as much as how many points is this? We were right around here, right around 1744, and we dropped all the way down to about 1460. Okay, over that period when the Swiss National Bank said we're not going to buy euros anymore. We already have €500 billion in our foreign exchange reserve. I don't want to be the a-hole central bank governor that has €500 billion in reserve when there's a chance that that currency would suddenly lose value, and it did lose 40% of its value. So imagine how the central bank governor of S&B is feeling right now. Jordan would be thinking, what the heck did I do? I just destroyed my forex reserve. So my point here, guys, is this. S&B already helped alert everyone about that potential for euro weakness. Even before that, look at your chart. Since the holidays, December, we've sold off by quite a lot. Okay, look at the gap that you had during 0.2. When markets closed for 2014, we had our euro at around 21.50. Since the Jackson Hole Summit, where Mario Draghi announced the three arrows approach, his version of the Japanese three arrows, where he argued for QE, we have seen your euro sell off. Okay, from about, well, these are not the exact numbers. We have seen your euro sell off from about 3,100 to our lows at 1,400. So what am I saying? I'm saying that even before this, your euro has been dropping. Unless, and one more thing, yesterday we heard that figure of 50 billion a month. So everybody's expecting that already. The way I look at it now, unless I actually hear that the ECB would be introducing 100 billion euros a month in OMT purchases, the market may have really run well ahead of policy. The currency may have sold off well ahead of this QE program. Another way of looking at it is comparing what happened when the US did its own QE programs. Okay? So what happened when the US did its own QE program? How did your euro perform? And let's see. So QE1. QE1 was worth what? Pan and fire, a lot of the banks are saying parity. And I don't doubt that long term we could be talking parity. A lot of the banks are saying, yeah. In fact, even before this, they were saying 2016 it's going to be parity. A lot of the banks have adjusted it to end of 2015, and I don't doubt that there's a good chance of us getting there. But I don't think that it will all be just this QE program that would take us there. Even more important would be the Greek elections. If the opposition wins and Greece decides to leave the Eurozone, that's going to create existential risk for the Euro. So it would probably be a cumulative of reason for us to get there. Now let's take a look at what happened with your Euro during the US version of OMT. QE1, when the Fed decided to buy 800 billion US treasuries. What happened? From 24 to 47. Okay, big move. That's in a span of about 6 months. So we're talking how much here, guys? We're talking 2,300 pips. Now, QE2, what happened? QE2 was something that a lot of people were already expecting. QE1 was a surprise, okay? So QE1, it wasn't really banded out. It wasn't discussed in media for a very long time. The Fed at that time was pretty quick. The Fed and the US Treasury at that time were very quick in announcing it. So you have this big response on the market. But look at what happened in QE2. You did not actually see a big euro rally, a big dollar sell-off immediately. It actually took a while. It took a month or so before the idea of newly printed money took hold, before the idea of another 600 billion took hold and forced your euro to depreciate. And then we talk about QE3, the latest QE program for the US that basically to me looks like the pattern where the ECB's, well, at least the rumors of ECB's program is patterned after. And what did QE3 do? Sure, it pushed your euro from 28 to 36. But it took a very long time. We did not have a big spike. So what am I saying here? What I'm saying is, you look at your euro and see where we've come from. Jackson Hole Summit from last year, around 36, 35, let's say 35. And we went all the way down to 1457 already. So we've had a 2,000 pip sell-off already. So what am I saying here? Even if I hear that the ECB will adopt QE, if it's less than that 50 billion figure that was bandied out yesterday, I would expect that people would say, hey, that's been priced in. And instead of the textbook response where you ought to sell the currency, market might be disappointed. If it's even less than that, if it's only 600 billion, the way Olan told us last Monday, then even more reason that I would be afraid that market's response would be to take your euro to the other side. Market's response would be to actually see your euro pick up. So how do we trade this? Well, I have no idea. So how do we respond to this decision, guys? Um, I'm thinking, and this is dangerous. Okay, this is very dangerous. After what we have seen last Friday when the SNB did its thing, and we basically end up with zero liquidity. One potential for us would be to just try to straddle our release. If we find the market disappointed, just how big of a pullback should we expect? At this point, I'm not even going to pull my fibs from these highs. From your, sorry, I'm not even going to pull my fib from your highs from the last Jackson Hole Summit. I'm not even going to pull my fib from your highs last December. At this point, I just want to see where are we with respect to the price action for this year. Okay, so this is your PA for this year. And okay, looks like we actually have a decent retracement already. We found ourselves about 38.2 at 1657. So that's something that I will try to remember. The potential for your euro to rally past that number. I look at the potential for your euro to get somewhere around your 61.8 replacement area. Maybe these consolidation floor are about 1750 region. So that's a number that I would look for if we have a disappointing QE. Definitely, I would be disappointed if it's less than 50. Right now, for me, the only scenario where I would be really excited about pushing your euro down to 1.12 and then 1.07 would be if if Draghi tells me 100 billion a month. Okay, give us that number, and I think even though we've sold off already, we might see this dropping further. To me, the bigger risk is a pullback. Now, when is this all going to happen? Would it happen during the bid rate announcement, or would it happen during the press conference? It would still be important to watch the press conference. I think if there are changes, it's going to happen. It's going to be released along with the release of your bid rate. We would still want to listen, of course, to the press conference. The press conference is about 45 minutes after the actual bid rate announcement. As far as interest rates are concerned, we don't really expect any changes there. As the ECB indicated before, the previous cuts into negative territory were the last, and the next one would be that QE announcement. So guys, again, textbook theory says that if a central bank will do quantitative easing, meaning they buy the debt securities of the government. If a central bank prints new money to buy that debt security, you increase the currency in circulation, and if you increase the currency in circulation, you make the currency cheap. Okay, wherever you go, whatever product, even if you're talking household goods or crackers or whatever, if you increase the supply of something, you lower the value of that. You lower the value of something means that as far as your EURUSD is concerned, we actually see your euro dropping on a QE. That's the textbook theory. But because, as we said, we've already seen a big sell-off. For the last 2 months alone, you've dropped by about 1,000 points since the announcement of since the Jackson Hole Summit, where Mario Draghi floated the idea of OMT, you have seen a 2,000 point sell-off already in your euro. So he has to impress the market. He has to surprise us with a very big figure for us to say it's going to drop some more. And one thing about trading anything, not just Forex, but even trading stocks or bonds or commodities, markets tend to move ahead of itself. Markets tend to price in what's expected. And the idea that that a QE will happen has been floating around for a long time. And if you look at your chart, it seems to have been priced in already over the last couple of months, especially last week. So what's my advice if you're trading this? Well, for one, reduce your trade size. Okay? It's a bad idea for you to trade at margin and very near, use up all your equity. Even say we get, well, one big surprise would be there will be no announcement at all. No QE, which is, I think, at this point, an impossibility. Even if I were to hear that, the immediate response, of course, would be for your euro to rally up if there's no QE announcement. Even if I hear that, I still would not dare trade all of my account equity. Okay? It's a bad idea. So reduce your trade size. Otherwise, you're not trading. You're gambling. Of course, I know someone who did that. Turned $2,000 to 21,000 overnight on NFP, but he was gambling. And we're not, okay, I don't encourage people to gamble on these events. Okay? Take ordinate risk. Okay? Limit your position size. Just try to remember, no announcement, which is, like I said, impossible. Expect your euro to shoot up. If we have a disappointing QE, I would call anything lower than 50 billion disappointing. I would look for your euro to shoot up. There could be a lot of volatility because some people would still think that's QE, and according to textbook, you should go down. So some people would still try to follow the textbook. So be cautious. Okay. Now, if it's 100 billion, now that's the only time would I consider selling your euro. Maybe if I see euro at, say, you cover the gap from the holidays, I'd be interested in selling again from there. After all, that's still QE. Long-term trend would still be for euro weakness. It's just that right where we are right now, we've priced in quite a lot of that weakness. All right, folks, we're actually just about 30 seconds away from the ECB announcement. If you have any immediate questions, concerns, feel free to raise them. So about 15 seconds away, guys, for that big announcement. Let me open my other platform. See the news. Yeah, you've got some people trying to price it in. I'd rather not risk it. Okay, and what have we, guys? Well, no, we're not really going anywhere. Looks like we will have to wait for your press conference. And we're shooting up. So unchanged 0.05. Let me see if I could get more details. I don't have any details yet. So this will all be down to the press conference. During the press conference, they probably would announce the game plan there. So let's just try to remember what are we looking for. We've already heard about the 600 billion figure. We've already heard about the 50 billion a month figure. So those would not be very interesting for us. If I hear that it's going to be, say, 30 billion, then to me that sounds very small. Very small means that euro has dropped so much already that I ought to be buying it. If the announcement is something more of a range, if they say it's about well, remember, the US, when it did QE3, they said 40 to 80 billion. So if it's a range of figures, you'd expect volatility, you'd expect a lot of whipsaw. But again, I would ask, what's the top end of that range of values? Now, the only thing or the only number that would have me follow the textbook is, hey, thank you. So we'll hear about those further measures during the press conference. So it's not really something new. And I'm really preparing myself now for getting disappointed. Disappointed in terms of the numbers are not big enough. And like we said, if it's not a big enough number, especially if there's no specific number at all, and they will keep us guessing on just how much they're going to do, that's a cause for disappointment. And you'll have me looking for this to jump up to your 1750s area. Now, I don't want to speculate and take a trade now, folks. If you want to speculate, I would suggest limiting position size. I'm looking at this and I'm thinking, I can't really trade it very technically. You had a low of 1460, so that's really too far for me to put a stop on any longs that I take at that level. So guys, the press conference is going to be about 40 minutes from now. Let me go back to overview, folks. Are there any questions at all? So a complete surprise with us would be no announcement during the press conference at all on numbers, how much the QE is going to be. They might, here's something that I'm afraid of. During the press conference, they will outline the conditions where OMT will be undertaken, but they do not tell us what's the number, how much do they plan to put in, okay? Just how big are they ready to print? So no numbers would be a good excuse for us to go look things to look up, for the things to look up. Not really, but you know what? Let me open my actual platform for trading, and let me show you something that I think I would prefer rather than trading your euro. Okay? And what would I prefer instead of trading your euro, at least now your EUR USD? I would prefer looking at this. your euro gold chart. We've actually shot up a bit already in our euro gold chart. But here's the thing. QE is supposed to create inflationary impact. So I'm looking at this and I'm thinking there's a lot of potential still for us to push higher. Unfortunately, my charts are a bit limited. Let me go monthlies. Okay, I can't go back to 2000 in this in XAU EUR, but you can extrapolate from your XAU USD charts just how much higher your XAU EUR could get. So what am I saying? I'm saying that if you're in for, say, more of a long-term trade, you may actually have a lot more ground to cover. You'll feel a lot more secure with an XAU EUR trade. Remember that this is not going to be just about a weakness in the euro if you trade this, but you would also be playing the idea of increased volatility. You'll also be playing the idea of the Greek elections turning out poorly, creating existential risk for euro. And you'll also be playing with the idea of just how cheap gold is right now compared to where gold was from 4 years back. And we have to remember that the money that drove gold from 2008's 600s area all the way up to 1900, that's still there. You know, what the US central bank did was to stop printing more money. They have not removed the money that they introduced into the system yet. So additional cash from the ECB ought to prompt your gold charts to go up. But yeah, let's try to come up with a webinar that's specific for how do we trade gold. All right, guys. We're actually running out of time. Yeah, I will ask I will ask FX3 to send the invites once we've come up with that webinar. So again, folks, please try to watch for the press conference. The thing to remember: no figure would be bad news for euro bears. Good news for the euro. Okay, your euro was sold off by 2,000 points already since August, when Draghi told us about OMT. Okay, and unless he surprises us with a very huge number, the more likely scenario is people will be disappointed, and with disappointment, you look for a pullback. People who sold before thinking, he's not giving me what I want, let me get out of the market. And as people get out, you see your euro bounce. Okay, so folks, we're running out of time. Any other last few questions? I wouldn't even discount the potential for us to pull back over the next week or so, all the way close the gap, if we don't hear anything, if there's no number, if there's no figure that's announced. Probably it would trail your XAU EUR, but they're still very much correlated, so it should jump up as well. In fact, it may be trailing behind, so you can just use movement in XAU EUR to follow using XAU USD. Silver's very confusing. Good luck. All right, folks. I'm afraid we ran out of time. Thank you for joining, and I hope to see you next time.